In a world powered by silicon, where microchips are the invisible engines behind our daily lives, the stakes have never been higher. A new trade war looms on the horizon, threatening to disrupt the delicate balance of global commerce and innovation. President Trump's plan to impose steep tariffs on imported semiconductors threatens to reshape the global technology landscape, sending shockwaves through the industry and beyond. For Apple, the world's most valuable company and a symbol of American innovation, the stakes could not be higher. These tariffs directly target the heart of its products, from the iPhone to the Mac, putting the company's entire supply chain under intense scrutiny. The outcome will determine not just the price of your next smartphone, but the future of American manufacturing, the fate of thousands of U.S. jobs, and the country's position in the global tech race. America's reliance on foreign-made chips is at the core of the issue, exposing vulnerabilities in the nation's supply chain and raising questions about long-term security. The Trump administration sees this as both a national security and economic risk, aiming to force tech giants like Apple to bring manufacturing back home and reduce dependence on overseas suppliers. Apple, at the epicenter of this storm, faces immense pressure to adapt its business model or face higher costs, operational challenges, and potential loss of market share. Tariffs are essentially taxes, and those costs often get passed to consumers, meaning pricier iPhones, slimmer profits for Apple, and tough choices for buyers and investors alike. The entire tech ecosystem is at risk, as disruptions in the semiconductor supply chain ripple outward, potentially causing shortages, delays, and uncertainty for countless companies and consumers. Can the U.S. realistically onshore such a specialized, capital-intensive industry? Or will these policies backfire, raising costs, slowing innovation, and harming America's global competitiveness in the long run? The answer will set a precedent for how business and politics intersect in this new era, shaping the future of technology, trade, and economic power. The stakes have never been higher for Apple, or for the future of American tech, as the world watches this high-stakes tariff showdown unfold. Apple CEO Tim Cook didn't wait to react. He moved strategically, anticipating the challenges ahead and preparing Apple for a rapidly changing political landscape. Instead of engaging in public confrontation or making bold statements, Cook chose a path of direct diplomacy and targeted investment, aligning Apple's interests with the administration's economic goals. By pledging to boost U.S. investment, Cook positioned Apple as a valuable partner, not an adversary, to the America First agenda. This strategy was carefully crafted to increase spending with U.S. suppliers, supporting American jobs and industries, and to invest in new domestic facilities, signaling Apple's long-term commitment to the U.S. economy, all while maintaining Apple's global supply chain model and international reach. Cook's personal engagement with President Trump and top White House officials underscored the seriousness of the moment and Apple's willingness to collaborate at the highest levels. These weren't just photo ops for the media, they were high-stakes negotiations, with real consequences for Apple's future. Apple used its immense scale and financial power as leverage, presenting itself as vital to the U.S. economy and a key driver of innovation and growth. This is how major corporations now operate in a politically charged environment, navigating policy shifts and public scrutiny with calculated moves. Apple's approach is one of pragmatic adaptation, mitigating risk, ensuring business continuity, and generating goodwill with both government and the public. By investing more in the U.S., Apple not only addresses political demands but also strengthens its supply chain resilience and local partnerships. This countermove turns potential crisis into opportunity, protecting Apple's bottom line and reinforcing its leadership in the tech industry. Other companies are watching closely, ready to follow Apple's playbook and adapt their own strategies in response to shifting political winds. In this new era, corporate diplomacy is as crucial as innovation, shaping not just products but the very future of global business. President Trump's tariff announcement sent shockwaves through tech. Tariffs of up to 100% on imported semiconductors aim to force companies to shift production to the U.S. But the policy included a key twist: exemptions for companies that commit to significant U.S. investment. This carrot-and-stick approach created a two-tiered system, rewarding those who invest domestically, penalizing those who don't. For Apple, whose products rely on global supply chains, the threat was existential. The exemption offered a costly but clear way out, shifting the conversation from resistance to negotiation. The administration used tariffs as leverage to drive private sector investment. Apple's efforts paid off elsewhere too. its smartphones were exempted from a separate 25% tariff on Indian imports. This relief, likely tied to ongoing investment commitments, showed the exemption process in action. Companies willing to engage and invest can navigate the treacherous waters of modern trade policy. The message was clear: adapt, invest, or pay the price. Apple chose to adapt and won a crucial reprieve. In a bold and highly publicized response to mounting political pressure, Tim Cook stood shoulder to shoulder with President Trump and pledged an extra $100 billion in U.S. investment, a move that sent shockwaves through both the tech industry and political circles. This commitment brought Apple's total planned domestic investment to a staggering $600 billion over 4 years, a masterstroke in both public relations and political maneuvering, designed to showcase Apple's dedication to the American economy. The pledge handed President Trump a significant political win, while simultaneously positioning Apple for vital tariff exemptions and favorable treatment in Washington. But the investment isn't just about big numbers, it's fueling real, tangible projects, like the construction of a cutting-edge AI server factory in Houston, Texas, which is already creating hundreds of new jobs. This state-of-the-art facility addresses both the growing demand for US-based manufacturing and Apple's ambitious push into artificial intelligence hardware. Announcing the pledge at the White House was a strategic move, signaling Apple's willingness to cooperate with government leaders and align its interests with national priorities. Apple used its immense financial muscle as a powerful negotiating tool, trading massive investment for political protection and regulatory advantages. This move accelerates a trend that's been building for years: Apple steadily expanding its U.S. presence under both the Trump and Biden administrations, adapting to shifting political winds. The $100 billion pledge is a clear quid pro quo, investment in exchange for relief from punitive tariffs and a more stable business environment. It's a vivid example of how corporate strategy is now shaped as much by political calculations as by traditional market forces, blurring the lines between business and government. Apple's bold move set a new standard for how tech giants navigate political risk, showing that investment at home can be a powerful shield. The message is clear: invest at home, secure your future, and ensure your company's place at the table in America's economic and political landscape. Apple's U.S. investment is significant, but don't expect iPhones to be made in the USA anytime soon. Replicating Apple's vast Asian supply chain in America would take years and cost billions. Specialized skills, infrastructure, and networks in Asia can't be quickly duplicated. Full reshoring would mean higher costs, passed on to consumers as pricier devices. Apple's compromise increased domestic component sourcing, not full assembly. Even with exemptions, existing tariffs still cost Apple over $1 billion per quarter. Yet Apple's global supply chain and strong margins let it absorb these shocks better than most. The bigger trend: supply chain diversification. Apple is accelerating moves into Vietnam and India, reducing reliance on China. This strategic shift is crucial for managing risk in an unpredictable world. Flexibility and resilience are now as important as cost. Wall Street quickly rewarded Apple's strategic moves. News of increased U.S. investment and likely tariff exemptions sent Apple's stock up nearly 4%. Investors saw Apple had diffused a major threat, clearing the path for growth. Analysts praised Tim Cook's leadership, a masterclass in managing geopolitical risk. Apple's engagement over confrontation protected its interests and reassured markets. Financial analysts raised price targets, reflecting new confidence in Apple's outlook. For global giants, political acumen is now as vital as product innovation. Apple's stock surge showed that effective corporate diplomacy pays real dividends. In today's world, navigating politics is essential for business success. Apple may have won the tariff battle, but a bigger challenge looms: artificial intelligence. While rivals like Google and Microsoft surge ahead in AI, Apple is seen as lagging. The pressure is on. AI is becoming the backbone of all digital products and services. Reports of setbacks in Apple's AI efforts, especially with Siri, have fueled concerns. Tim Cook insists Apple is investing heavily in AI, but the market wants a clear vision. Strong earnings have calmed nerves, but investors want more than profits. They want leadership in AI. This challenge is more fundamental than any trade dispute. Tariffs can be negotiated. Losing the AI race could erode Apple's edge for a generation. The question: can Apple leverage its platform and resources to catch up and lead in AI? The answer will define its future. President Trump quickly claimed Apple's investment as a victory for America first. The policy uses tariffs to push companies to bring jobs and manufacturing home. Apple's $600 billion commitment is proof, in the administration's eyes, that the strategy works. Critics warn that rapid reshoring is costly and complex, risking higher prices for consumers. Apple's response? A middle path, big US investments, but keeping its global supply chain intact. This balancing act is a model for other multinationals facing similar pressures. The lesson: proactive engagement and strategic investment can be more effective than resistance. Corporate diplomacy, backed by real money, is now the playbook for navigating nationalist policies. It's a new era in the relationship between government and big business. Apple's $100 billion US investment was a masterclass in corporate diplomacy. The move secured crucial tariff exemptions, boosted its stock, and gave the Trump administration a political win. High-level negotiation and strategic investment are now essential tools for global companies. Apple's approach, increasing domestic sourcing while keeping assembly overseas, shows a pragmatic compromise. The future of American manufacturing may be a hybrid, more high-value roles at home with global production networks, but the real test is ahead. Can these strategies rebuild US tech manufacturing or just make global trade more complex? As others follow Apple's playbook, the answer will shape American competitiveness and the price of technology. The next move is yet to be played.